Hi and welcome back to today's morning report on Thursday the 9th of July with me, Rich Market Analyst at Han Tech Markets. Moving on to dollar yen, and we had this sharp move down on yesterday. Big bearish candle, big breakdown below the 122 figure. It certainly seems as though that's been now broken. That sort of significantly changes the outlook. Again, another chart which has been sort of had its technical outlook on a sort of medium-term basis really impacted by these moves in the last few days. 220 ticks to the downside pretty much yesterday. Massive candle. And we've had a bounce today, but that bounce is pretty much only unwound back towards half of the move. And also, interestingly, look at this 61.8% fib level. Pretty much to the pip, forming the basis of resistance 21.52. So that is really interesting today. All these indicators continue to look corrective, really. So you wouldn't get too excited yet about a rebound gathering strength, because you haven't reclaimed. You haven't even reclaimed half of the downside candle yesterday, and also that 61.8% fib level. Not only that, old support around 22 figure. This is the hourly chart. Old support around 22 figure becomes the new resistance, and it certainly hasn't been taken at all, really. So it's just unwinding this oversold move, really. I mean, look at the hourly RSI back towards 60 and falling over. MACD lines haven't even unwound yet, back towards neutral. So I would say that at the moment, you can't really get too excited about this being a rally of any sustainable move, because you haven't really taken out any sort of overhead barriers yet that would prevent it from being a rally. So just keep that in mind. It's just unwinding this move. Yes, it's a positive reaction. Yes, it is higher. And I mean, I suppose you could argue the fundamental move or the news flow move, where everything seems to be a bit more positive in the markets generally, and that's helped to drive traders back away from the yen again. But at the moment, it is not done anything really to suggest that it's a sustainable move. So I would I'd urge you to keep that in mind. Now, in terms of support levels, obviously yesterday's key low coming in at 2038 was the move, and there was a minor resistance that built up around 2090 as well. So you could say that minor resistance becomes new support as well on the downside. So watch out for that. But certainly it looks as though the rally has already sort of come under a little bit of a ceiling, and it's struggling to continue. So with that in mind, I wish you good luck in your trading, and I'll speak to you later. Thank you.